In this video, I'm going to give you a fair value gap trading strategy that will honestly change your life. It's simple, it's easy, and most importantly, it actually works. And if you don't believe me, go look at all these screenshots on screen now of traders who are already profitable using this strategy. And if that was not good enough, in the pinned comment down below, I'm going to give you the completely full free PDF of this trading strategy with the screenshots and with the rules that you need to become a consistently profitable trader. So let's get straight into the video. Okay, so the first thing we're going to do is we're going to get onto the 4-hour chart for this trading strategy, and we're going to mark the most recent fair value gap in price action. Now, it's really important to understand this trading strategy, even though it's on New Zealand dollar against the US dollar, will work on any market. If there are candlesticks on the trading chart, this will work, right? If you can see a fair value gap, this will work. But what we're going to do is we're going to get onto the 4-hour chart and we're going to mark the most recent fair value gap in price action. Now, if you don't know what a fair value gap is, go look at this picture on screen now, which explains what it is. It's a very simple entry pattern. All it is the gap between, when we're bearish, this candle wicks high and this candle wicks low, right? That's all it is. It's a simple pattern. The pattern itself does not make money, it's the logic. But for this trading strategy, what we're going to do is we're going to mark out the most recent fair value gap in price action. Now, if you spotted this, well done. This is the most recent fair value gap in price action. However, this wick completely fills this gap here. So let me mark this out for you. This fair value gap right here, can you see how this wick fills and breaks through the fair value gap, right? That fair value gap right here is no longer valid. A big red cross through this fair value gap. It is no longer valid because this wick broke right through it. So remove this. The next fair value gap is this big juicy fair value gap, right? We always want to see this because this is really important when you've got a big fair value gap, right? So it's a huge sign from smart money, but all we need to do for this trading strategy is mark out this fair value gap like this. Right, remember, fair value gap is the gap between this candle wicks high, this candle wicks low. Wait for price to hit it, and then as soon as price hits it, so as soon as you start to see price go into it, you don't even need to wait for the candlestick to close, but as soon as price hits this fair value gap, you're going to get onto the 15-minute chart, and we're going to start to look for our entries, right? So that's the only reason we use the 4-hour chart, right? Just to mark out a 4-hour fair value gap. Now, you might be wondering, why are we using a 4-hour fair value gap? This acts, and you can see the 4-hour fair value gap like right here in price action. That acts as our higher time frame, right? This tells us our daily bias, and it tells us smart money's intention. So I feel like when you have the logic behind a trade, it gives you a lot more confidence. You know, when you're on like losing streaks and stuff, when you understand the logic behind why you're actually taking the trade rather than just like a random indicator, you're a lot more confident when you go through losing streaks or just in general, right? Like putting money on the line. So this 4-hour fair value gap is a massive clue to smart money traders that price is moving in the opposite direction. However, we can't just randomly do this, right? We can't just randomly start to sell as soon as price hits this fair value gap. We need to wait for confirmation. And what confirmation really looks like, let me make this really clear. So this is the 4-hour fair value gap, which we just talked about. What confirmation really looks like is price hits it, it drops, like it starts to reverse in the opposite direction. It gives us a retracement, a high probability retracement, which smart money traders get on, and then price drops like a brick, right? That is what confirmation looks like, right? We want to see price shoot off on the lower time frame, on the 15-minute chart, as soon as it hits this big, juicy 4-hour fair value gap, right? I know I keep saying juicy, but bear with me. So you can use this, you can use any time frame really, as long as it's below the 4-hour chart, right? But for this example, and in the PDF down below in the comments, I've just used the 15-minute chart because it's simple, and the reality is the higher the time frame, the higher the win rate, but the less setups you'll get. So, you know, you can do this on the 5-minute or 1-minute chart. The exact same principle applies. But what you're going to do is, and obviously if you're day trading, you need to do this at a key time of day, right? So we're not going to trade at any random time. We're going to do this at key time of day. So can you see this massive wick here? This is a news event, so almost just ignore this wick, right? And you can always tell it's a news event when it's got this massive wick and then quickly goes off in the opposite direction, right? Completely ignore this wick, almost just act like it doesn't exist because it's just like a news event. But can you see, really important here, right? How price comes up, it chops for a bit, ignore this news event, it chops for it, chops for a bit, moves up a bit, tracement, and drops, right? Really important here. So for our entries, the thing that we care about is, first of all, we need to see it at key time of day, right? So the first thing you're going to do is mark out the 4-hour fair value gap. Then you're going to wait for price to hit the 4-hour fair value gap. And then you're going to wait to see is this at a key time of day or not, right? Now, for those who don't know, this is in New York Eastern time, right? Doesn't matter where you are in the world, just use New York Eastern time because it's just easy. And it's almost a standard that all traders use, right? Whether you live in the UK like I do, or in Dubai, or Japan, wherever you live, just put New York Eastern time, right? Makes it simple for all traders. But for forex and for any market in general, 2 a.m. Eastern, right? 2 a.m. Eastern, all the way really to around 11 a.m. Eastern is like the golden move, right? That is when you have London, so you've got all of Europe awake and you've got the Americans awake, right? That big overlap section. So 2 a.m., mark this down for your notes, 2 a.m., which is right here, all the way until 11 a.m. That's like the golden zone for trading, right? Because you've got Europe, you've got, the Middle East, like Dubai and stuff, and you've got the Americans all essentially, awake at that time, right? But anyway, besides the point, what we care about now, and do you remember how I said earlier, we want to see price hit it, drop, give us a retracement, and then ride price down, right? Do you remember how I was saying that before? Well, what we need to see, and it's always subjective. When you hear these guys online saying, you want to wait for confirmation, you want to wait for reversal, we want to see price quickly move off in the opposite direction. What does that mean, right? Now, the easiest way of saying this after years of trading is just to wait for a fair value gap to form in the opposite direction, right? So remember, this big fair value gap, and you can see it right on the 15-minute chart. You can use your imagination. You can imagine this being one big 4-hour fair value gap like we just talked about. What we really want to do is we want to see price hit this, right? Hit this bearish 4-hour fair value gap, form another bearish fair value gap on the 15-minute chart or whatever time frame you're using. I'm using the 15-minute chart. You can do this on the 1-minute chart, and then we want to enter on this new bearish fair value gap and ride price down. That bearish fair value gap that forms, the first bearish fair value gap that forms in this, it doesn't have to be in this 4-hour fair value gap, but once price hits this 4-hour fair value gap, the first bearish fair value gap that forms, that is smart money essentially screaming at each other, right? Telling each other, this is the time. This is the time to get into the trade because you cannot get more confirmation than this, right? So remember, 2 a.m., we're going to start looking for our entries. We're not doing it at, end of Asia. It's not London. It's dead time where price chops, right? Asia's all the way down here. We're going to wait for the first fair value gap that forms after 2 a.m. or at 2 a.m., right? So the first fair value gap that forms, the first bearish fair value gap that forms is this one. Really important to understand this, right? There is a fair value gap here that is invalid, right? The reason why is this is a bearish fair value gap, right? This is a bearish fair value gap. You do not look for bullish fair value gaps. You completely reject this, right? The 4-hour fair value gap tells us our bias and direction. We're looking for confirmation. So completely ignore the bullish fair value gap. This is why so many traders go wrong, because they just look for the entry. The entry is the least important thing. You need to have the direction or the bias right? You need to have that right. So ignore this bullish fair value gap. This is what we care about here, right? And I'll show you 2 different entries, which is it's actually really nice here. This is actually a beautiful bit price action. But this fair value gap right here in the heart of London session forms bearish fair value gap, right? This is what you want to mark out, and this is what's going to be your entry, like this, right? Mark out this bearish fair value gap that forms on the 15-minute chart. There's your confirmation. There's your confirmation that price is actually going to reverse, right? This is your confirmation that price is going to hit this 4-hour fair value gap and start to drop. That's your confirmation. That's what we're looking for. We're not blindly just selling as soon as price hits this fair value gap, right? Because that's just gambling, right? We want to see confirmation, and waiting for a fair value gap to form in the same direction as this big 4-hour fair value gap is the easiest way to do it. So for your first entry, let's say you're a London trader, you're going to enter on this fair value gap. Now for your stop, realistically your stop can be anywhere. Obviously don't be don't be stupid and have it really tight, right? But for me, just put your stop at this high, right? Just put it at this high. You don't have to, right? If you're really, if you really want a tight stop loss. But remember, tighter the stop loss, the higher the chance that you're going to get hit, right? Your stop's going to get hit. So for me, we're on the 15-minute chart, we're day trading. Just put it at the high, right? Put it at the high, 6.3 pip stop. And then for your take profit, from minimum, if you've been watching my channel for a while, you'll know I always target a 3-to-1, easy free risk reward ratio, because you can get that every day, right? Using this strategy, you will get a sell every single day. Will it be in New Zealand dollar every day? No, but it will be in multiple. You'll find a sell in one market, right? In every single session, if you look hard enough, which is why I'm a big believer in not trading one pair. In fact, I think that's probably one of the worst things you can do is trade one pair. You want as many pairs as possible, and you want to cherry pick the absolute best pairs to trade on the day. But anyway, that's a topic for another video. So 3 to 1 minimum, right? Stop wherever seems logical. Don't be stupid. Don't put it really tight. And if you want to, and this is why I love the 15-minute chart. Can you see this low and this low here, right? Nice, lovely bit of liquidity here. Now, if you don't know what liquidity is, absolutely fine. You do not need it. Although liquidity will increase your win rate massively. Liquidity is simply stop loss orders, right? You remember support and resistance? You remember how people say that price will bounce off like this? You remember that? You probably remember hearing about this. What actually happens, even if price is bullish, this is what will happen. Price will never bounce off these lines, this line, unless it's going to generate more liquidity, unless it's going to get more people to start putting their stop loss orders here. What will actually happen, if price is going to reverse, is it will go down, it will take out liquidity here and here, it will take out all those stop loss orders. Smart money, those with billions, will start buying, and then they'll ride price off in the other direction. It will never, right, do this, right? The only time it ever does this and respects this random blue line is just to get more traders to put their stop loss orders there. Or you might hear that before, you might hear people saying generating liquidity. Really the exact same thing, right? Really the exact same thing. So you can target this liquidity for an easy, I mean, this is the 15-minute chart, guys. It's the 15-minute chart. You get on the 5-minute or 1-minute chart, you can get an even tighter stop loss with an even bigger risk to reward ratio. But this is an easy setup on the 15-minute chart. And I think this is probably the easiest setup in all of trading. Obviously, if you want the highest win rate, bias, sweep, entry, liquidity sweeps, that's what you want to be looking for. But if you just want to make money ASAP, I mean, I cannot make a strategy as simple as this, right? I deliberately removed liquidity from it. I know, I love liquidity, right? I have to mention it in every video, but you don't need liquidity, right? Lots of people struggle with liquidity. So if you do, this could be the trading strategy that makes you profitable, right? So you remember how I said I was going to show you a second entry, right? So you know how I said I was going to show you a second entry? Let's imagine that, you live in the US or whatever, right? You can't trade London session. You've missed this setup and you're around here in price action, right? Around New York time is when you trade, or you just want to trade the New York session. What you can do is you can enter on the next fair value gap that forms in the price range. Now, really, really important here. Really important. Pay attention, right? When you are bearish, you want to pick the highest fair value gap. When you are bullish, you want to pick the lowest fair value gap, right? So I'm not going to talk about the bullish example, right? Actually, yeah, I am. There's two fair value gaps here. You want to pick the lowest when bullish. You do not want to pick this one here. You do not want to pick this one here. And when you're bearish, you do not want to pick the lowest. You want to pick the highest fair value gap, right? Almost essentially saying you want to sell high, buy low, right? Buy low here, sell high, right? You don't want to be buying all the way up here. You don't want to be selling all the way down here, right? So if you've ever got two fair value gaps and you're bearish, pick the highest one. Do not do that. That right there is, that right there will make you so much money. It's insane, right? It's insane. Who doesn't love money? I mean, look at this, right? How beautiful this is with the bodies almost respecting it. Let's just make this a bit more big. It doesn't look as sexy now, does it? There we go. Right. So what we're gonna do, let's move this out, right? Is you're gonna enter. Let's say you're a New York trader, you've missed this for whatever reason. You're gonna enter on this fair value gap. Now, for your stop, again, it's completely up to you. I would just put it at this swing high here. Let's just remove this. Right. So you've got your first easy high probability setup in London, and then again a setup in New York with your stop here for a 5.5 pip stop loss, and then for take profit, at least a 3 to 1 like this, or just target liquidity. As simple as trading can get, right? I cannot make trading any more simpler than this. If you're using the strategy and you're looking hard enough, and by looking, what I really mean is you have a watch list like I do, right? So the majors here, you've obviously got Euro, all the majors, you've got indices, you've got commodities, you've got crypto, you've got the crosses, which is like GBP, JPY. Obviously, you don't need all of that, but if you've got like a collection of maybe like 10 currencies and you're just scanning through, remember, you need the 4-hour fair value gap first, right? So if there is no 4-hour fair value gap, like you do not even look at the market, right? So, but if you've got a watch list of just a few currencies, or even all the majors here, Euro dollar, GBP USD, AUD USD, NZD USD, CAD, Swissy, and then obviously yen. If you just use all these and look for this setup, you'll find it. You'll find a setup every single day in one of the sessions, right? In one of these pairs. So if you look hard enough, you'll find it. And all you really need is a 50% win rate with this and a 2 risk to reward ratio. and you can become profitable and you can become rich. And clearly, as you can see here, you can do way better than that. Way better than that. So again, if you want this free strategy, check the pinned comment down below. If you're watching this on X or Twitter, you shouldn't be. You shouldn't be. You should be watching this on YouTube. It might be in the pin suite. This model might be in the pin suite. It may not be, because I'm going to change it soon. I'm going to replace it with a new training that I've actually made completely for free. If it's not in the pin suite, come onto YouTube and you'll find it in the pinned comment down below. And if you want to learn my 7 best trading strategies, go check out this video on screen now. And I guarantee you there will be a trading strategy for you that you can master, that you can retire your family on, and all that good stuff. So make sure you like and subscribe and go check out that video on screen now.